Hi everyone, it's Monday the 13th of December 2021. Good day for the Australian share market, opening stronger today to start the week, 7379 on the 200. That's an increase of 0.4%. Energy, real estate stocks, some miners doing well too. For more, I spoke earlier with George Boubouras from K2 Asset Management.
A number of things, Ricardo. Markets back to near highs in the US and in the Asian region, partly in response to the stimulus from the central bank in China, world's second largest economy. The PBOC, their central bank, cut rates. Their economy is going through a lot of disruption over the past year and slowdown. And this is a good positive sign that they're trying to address some stimulus and start getting a turnaround of their economy, which will be more inwardly focused going forward with domestic demand and hopefully some fiscal stimulus. So markets buoyed on that activity with the stimulus.
On Friday night, we saw the US CPI numbers, a huge 6.8%, but not necessarily a massive reaction on the market. So does that mean inflation may have peaked in the US?
Yeah, it's a good question. These are very large inflation numbers, multi-decade highs. It came in expectation. It met expectation, therefore markets were happy enough with that. Remember, with inflation, for those that are not old enough, since the 91-92 recession, we've been living in that low inflation environment, which is very good for policy and obviously for savings, etc. But these disruptions we got globally on the supply chain are leading to very severe price behaviours and trade. And when you get through some solution and of supply chain disruption, hopefully at the end of 2022 and in 2023, a lot of that price pressure is expected to go, and that is where the market is judging the inflation risk going forward. There is wage pressure, etc., that may stay with us for longer, but in the main, the supply chain disruptions have been so severe that has led to a lot of this price pressure or inflation, which people expect to be going away.
So putting that all into together, right? So if we're saying we're seeing multi-decade high inflation, but that it may start coming off in a couple of years' time, what do you think it'll likely mean for when the US Federal Reserve meets later this week?
Yeah, it's a great question. This persistent inflation in the short term gives the Federal Reserve an avenue to start removing the stimulus for the bond buying program and begin what we call a taper. It gives them the excuse to start that taper earlier and therefore finish that taper earlier, that is, buy less bonds in the market, less liquidity. And once that program is complete sometime before mid next year, they can start therefore raising their short-term interest rate from historical lows. And a lot of the central banks around the world will be doing something along those lines. So that's what the higher inflation in the short term means. It gives them their avenue to start removing stimulus and begin that rate rise cycle from historical lows.
Okay, so considering that, in this environment, how do you invest?
Yeah, great question. So equities are generally reasonable hedges against inflation. Any sort of exposure, industrials, transport companies, etc., as long as they've got an ability to pass on those costs. If you're involved with property, as long as they've got contracts with their renters that are CPI based. So generally, equities are reasonable, and some diversified financials with high rate environment. Then very quickly, for those that's sitting at home getting zero on the term deposit, this time next year you won't be getting zero on the term deposit. You're getting somewhere between 0.5% to 1% quite comfortably, would be a guidance I'm happy enough to pass on. And obviously gold is a good hedge against inflation. And obviously this has been the year of the crypto. And while we don't participate in crypto, a lot of people have been participating in the digital gold environment, notwithstanding it's volatile, but they're looking for alternatives. And they think that's also a hedge against inflation.
And just finally, given this might be the last time I speak to you this year, looking back at the year that was, what do you think was the key market or corporate story of 2021? Yeah,
there's many stories on corporate 2021, but navigating the variants of COVID, and at the same time, it's been about M&A activity, mergers and acquisitions, these big mega deals globally in every economy. And in Australia, it's the acquisition of Afterpay, it's Oil Search, Santos mergers. It is just M&A activity in the non-listed and listed space because of that extraordinary amount of liquidity in the global economy. And that is the highlight from a corporate perspective, while navigating the variations of COVID, which we'll be continuing to do, no doubt, for the years to come.
George Boubouras there from K2 Asset Management. This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.